In the last two videos, I introduced you to the basic concepts underlying the Hurst Cycles approach to understanding the price movement of financial markets. It was a little dry discussing those principles, I'm sure you agree. So let's bring it all together by taking a look at some charts and discussing what those principles actually mean. This is a 4-hour chart of the S&P 500. And so let's take a look at the concepts that we were discussing in the previous videos and see how they relate to what we're seeing on these charts. First of all, the most obvious one, the one that jumps right out at you, is the principle of synchronicity, which tells us that the troughs are synchronized. In other words, the troughs of these cycles are synchronized where possible. They occur at the same time. The easiest way of seeing that on your chart is to display your cycle analysis by using waves. So let's do that. Now I hope you can see the relationship between those Excel spreadsheets I was showing you in the previous video and the cycles that we have on our charts. Here are the sine waves that represent the cycles displayed at the foot of your chart. And these cycles do obey the principle of synchronicity. In other words, they have synchronized troughs where possible. They also obey the principle of harmonicity. In other words, the relationship between the wavelengths in all of the cycles in our sentient FLD indicator have a ratio of 2:1. I presented the nominal model to you in the previous video, and of course the nominal model is reflected in your sentient FLD indicator in this table over here at the top left of your chart. In fact, you can see this nominal model would be exactly the nominal model that Hurst himself defined so many years ago. When we look at intraday charts or shorter time frame charts, we will see a slightly different nominal model, but the important thing to remember is that in our nominal model, the harmonic ratio between the cycle wavelengths is always 2:1. That provides the most effective way of working with the FLDs that are derived, of course, from the cycles. Now I've changed down to the 5-minute time frame to discuss a few other details here. First of all, I'd like to point out to you some M shapes. I'm sure that you are seeing them in your charts, but here is a simple M shape that formed from this trough roughly of the orange cycle to the next trough of the orange cycle, which was also, of course, synchronous with the troughs of the cycles all the way up to the yellow cycle. That orange cycle is, of course, the 3-hour cycle, and the yellow cycle is the 1-day cycle. That means that on this 5-minute chart, we have identified a 1-day cycle as having occurred over here. Now, let's take a quick look at our targets. What cycle jumps out at you? Can you see a cycle that has recently been governing price action? Here it is over here. The 6-hour cycle had a target down here at the trough of that 1-day cycle, and here is the 6-hour cycle target. This is the target generated by the 5-minute chart. Of course, that is the chart that we are on. But notice how the 6-hour target of the 15-minute chart has in fact already been reached, making it possible that that 6-hour cycle target has in fact been achieved. But now I would like to bring this whole discussion together by explaining to you why it is the combination of the principle of harmonicity and the principle of synchronicity that provides us with such powerful trading opportunities. We are going to be exploring trading with the sentient FLD indicator in the next module, but let me introduce the subject in this video by showing you how it is the principles that Hurst defined that actually govern our identification of trading opportunities. You can see on this chart that we have identified, or the indicator has identified, a trough of the 1-day cycle as having occurred over here. The trough of the 3-hour cycle, you can see in the cycle analysis, has been phased as happening over here. And clearly in terms of price, this is where that 3-hour cycle trough actually manifested in the price action. I've spoken in previous videos about the fact that there is often a slight displacement between the cycle analysis and the actual price action. Do not let it discourage you. That is clearly what we would call the 3-hour cycle trough. Now let's assume that we were wanting to benefit from a long trade out of this 1-day cycle trough. One way of doing that would be to wait until we have confirmation that the one-day cycle trough had formed. How do we get that confirmation? In fact, we get confirmation that a one-day cycle trough has formed when the one-day cycle FLD is crossed upwards by price. You will remember from our discussion about the FLD that that is one of the features of the FLD, that it provides us with confirmation that the trough has formed. Now, the one-day FLD is not an FLD that we see on this chart, but we can, in fact, use the one-day target from the hourly chart to estimate that that one-day FLD was about halfway through this move. So that was at this point over here. If we had wanted to enter into a long trade to catch the bounce out of the one-day cycle trough, we could have waited until price crossed the one-day FLD. However, and this is why the principles of harmonicity and synchronicity are so important, because of the fact that we know that these cycles must occur synchronously. In other words, when the one-day cycle trough occurs, the shorter 12-hour cycle trough and the 6-hour and the 3-hour and the 100-minute cycle troughs are also forming. Because of that fact, we do not need to wait for confirmation that the one-day cycle trough has formed. What we could do is we could wait until the 12-hour cycle FLD has been crossed, because we know that would confirm that a 12-hour cycle trough has formed, and it must of course be synchronous with the one-day cycle trough because of the cycle analysis that we have at the foot of our chart. And so we could lower the point at which we would confirm that the 12-hour cycle trough had formed, and therefore the one-day cycle trough must have formed. We can extend the same logic to shorter and shorter cycles. So the same logic applies to the 6-hour cycle. When the 6-hour cycle trough is confirmed, that would also, because of the principles of harmonicity and synchronicity, confirm that a trough of the one-day cycle has occurred. We can extend it further down to the 3-hour cycle, and eventually, of course, we can extend it down further to the shortest cycle on your chart, the signal cycle. And that is why the principle of harmonicity and synchronicity is so important to the sentient FLD indicator and the way in which we trade it, because we use those principles in the background of our thinking when we are identifying trading opportunities. Here is a quick test. The signal cycle on this chart is a 100-minute cycle. It is this pink line over here. What is the first interaction between price and the FLD following a trough of one-day magnitude, which we can see has formed over here? You, of course, know that is an A category interaction. And so price crossed above the signal cycle FLD in an A category interaction. What is expected to happen at the BC category interaction pair? Price is expected to find support at the level of the signal cycle FLD at the time that the first signal cycle trough forms in that market, following the trough of the one-day cycle, or a trough of at least the sequence cycle in magnitude. As you can see, price did approximately find support at the level of that signal cycle FLD. In the next module, we're going to be discussing in detail how you would trade this kind of opportunity. But to summarize the discussion we've been having in this Hurst Cycles primer section of the course, I would like to point out that the fact that price crossed the 100-minute FLD and then found support at the level of the 100-minute FLD at about the time we were expecting a 100-minute cycle trough confirms for us that the one-day cycle trough has formed in the market. Not only does it confirm it for us if we're thinking through it, but the sentient FLD indicator uses that information to inform its cycle analysis. Therefore, at this point over here, we were able to confirm that the one-day cycle trough had formed in the market. And that provides us with the kind of information that we are going to be using to make trading decisions, which is what we will be doing in our next module of the tutorial course. I look forward to seeing you there.